Hey everybody, Chuck Barone. It is Wednesday, January the 31st, 2024, what I like to call Powell Day, because the chairman spoke today and the markets reacted. Not in a happy way either. Of course, this is something I've been telling everybody to watch out for. This whole perfect scenario where everything's going to go perfectly. Well, today was one of those days where it just kind of didn't. Anyway, before I get rolling though, let me take a half a second. Welcome everybody to the show. And as always, thank you guys for your support. We appreciate you guys. You guys showing up here, watching these videos, doing what you do every day. Keeps the show going. We appreciate it. All right, so let's talk about markets today. As we've talked about and kind of talked a little bit about on the show yesterday, today would be the day the Federal Open Market Committee meeting would end. We expected, and it's exactly what happened, that the Fed would leave rates unchanged, which they did. We said that the highlight of the show would be Powell's press conference after, and it certainly was. Wow. Markets reacting strongly to Powell. Powell's comments, we'll go over those in detail here in a second, causing the market to have a major tantrum, just shedding stocks. Maybe they're a little too optimistic. So we watched the market across the board just tank today. The Dow falls 317 points, 38,150 on the Dow. The NASDAQ falls 345 points, 15,164 on the NASDAQ. The broader market, the S&P 500, falls 79 points. That's a pretty big move. 4,845 on the S&P 500. So you can see stocks across the board selling off. This might have been a little bit of a hysterical reaction, I think. Powell didn't say he was going to raise rates. He just said he's not going to cut rates in March. And this is the reaction to it. These markets, man, they're so sure of themselves. And if they're ever wrong, you see reactions like this. Now, amazingly, I guess all that money that was fleeing the stock market today ended up getting dumped into the bond market because bonds rallied like crazy, man. Look at these numbers. So the 10-year bond price is up, yields falling, right? So the teeter-totter. So the prices are up today, yields coming down. The 10-year down 9 basis points. Now at 3.97%, so under 4% on the 10-year. The 2-year falls 15 basis points, 4.21% on the 2-year. So these bond yields coming down, and that's surprising because basically the message today was rates are not going to get cut. So I don't know if this was a flight to safety. Bond market really isn't that safe anymore, especially with an environment with rates moving like they are. Fascinating day, though. Stocks tanking, bonds going rallying like this. Nuts. The dollar gained some strength today. The dollar up 18 basis points on the index. 103.55 on the dollar index. Just, kind of staying right where it is. Strengthening just a little on this no rate cut info, but nothing dramatic. So the dollar's still strong. Gold and silver today, well, they had kind of a weird mixed day. Gold gaining today ekes out a small gain at $1.10 per ounce for an ounce of gold, now sitting $2,038.70 for an ounce of gold. Silver falls today, down 25 cents, $22.90 for an ounce of silver. So basically, mixed bag in these markets today. Stronger dollar usually means weaker gold and silver prices. So it's nice to see the gold rally up a little bit, even a small amount in the face of a stronger dollar. I tell you guys, I think as this dollar comes back down to normal, gold and silver are going to blast off. I think silver is going to really be a big one. So, make your notes accordingly. Oil today, well, oil falls $2.04 per barrel, now at $75.78 for a barrel of West Texas Intermediate. I got to say, we've been calling these oil prices pretty closely. The bottom line is it just wants to be trading between 70 and 75. It has these little breakouts like it had here over the past week or so. But it doesn't take long for it to settle and then settle right back down into that trough. It is what it is. I mean, we just have observed this, and it's been this way for quite a while now. So if you're trading oil, govern yourself accordingly. It looks like there's a shot to make some profits here when it breaks out, because it looks like it just doesn't stay broken out very long before it's right back where it's supposed to be in that trough. Bitcoin today, following stock prices down. Not a good day for Bitcoin, down at $1,185, but still a good strong price at $42,392 for Bitcoin. So there it is. And I'm sure Bitcoin's going to make some news this year as these ETFs grow and strengthen. We're going to be following that for you guys, especially I know a lot of you guys watching this show are holders of Bitcoin. All right, so let's talk about Powell today, because that was the news of the day, right? So Powell takes the stage. The market's holding its breath, waiting to see what he has to say. So basically, Powell's message was simple. The Fed is hesitant to cut rates right now. And I've been telling you guys, the Fed doesn't cut rates just because the market wants it to. The Fed doesn't cut rates just because they raised rates. They cut rates to support the economy, okay? And when the economy is going great, the Fed doesn't really have much reason to stimulate the economy by cutting rates further. So I've been telling you guys, watch out for this. So what Powell basically said, here's the quote. Until the Fed is more confident that inflation has been defeated, that they would not cut rates. There will be no rate cut in March. Basically, he said that it is, paraphrasing here, unlikely that the Open Market Committee has let me get my glasses, has a level of confidence by March to cut rates at that point. So basically, ruling out a rate cut in March, much to the chagrin of the markets. That's when, as soon as Powell's presser was over, the markets turned south and stayed that way. Now, the interesting thing was the Fed, what I was telling you guys yesterday, they were looking for that change in language from a tightening bias to a more neutral or a cutting rate bias. They did get that. So the Fed did remove the language suggesting further rate hikes, which I talked about, as I mentioned, talked about yesterday. They also they said that they made notes that the risks to having employment and meeting employment and inflation goals are moving better into balance. That's interesting too, mentioning employment in the same breath as inflation tells us the Fed is not only going to be concerned about getting inflation back below its 2% target, but also supporting growth in the labor market. Now that's interesting because, that obviously supporting employment is the Fed's number 2 objective. But in an inflationary environment like we're in, you don't really expect to hear them talking about it on the same level as they're talking about inflation, but they did. I thought that was really, really interesting today. He said, we don't look at growth as a problem. We want to see strong growth in the economy. We want to see a strong labor market. Really? Well, because the way I've understood it and the way the language has been is the Fed feeling like a strong labor market kind of is inflationary. They've been trying to bring the hard jobs numbers down. And so that was interesting to hear him say that. And I got to say, even the economists at the Fed, have been predicting we're going to have a recession, a big downturn. Even they are surprised by the strength in the economy and in the labor market. So if the Fed's own economists can't get it right, what chance does a regular investor have, right? So clear line. Oh, this was a clever line today, I heard. They were talking about, I don't remember, one of the analysts or one of the big shot traders or whoever. And the line he used I thought was very clever. He said, well, the Fed usually takes the elevator up when they're raising rates, but they take the stairs down when they're cutting rates. And I thought that was kind of clever, because the rates, they sure did not hesitate to raise rates. Boom, 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 3/4 at a time, shocking the markets, right? And this whole cutting rates is obviously going to be a little bit more, what's the right word? Deliberate. Powell also said that the path forward is uncertain. So fascinating stuff from the Fed today. Obviously, you see the results in these markets. The stock market not reacting well. The bond market rallying like crazy. Crazy, crazy, crazy day. And we know we got big stuff coming up, guys. Huge stuff coming up. We got big jobs data coming tomorrow and Friday. Batten down the hatches, guys. Buckle up. It's going to be a fun finish to this week. Okay, a couple other little quick things before we go today. They came out today, announced 9 million job openings in the U.S. today. So that's actually back up above 9 million. It was on the job totals were falling. Now they're back up. I think this is going to be a big foreshadowing of some strong jobs data tomorrow when we get unemployment numbers, Friday when we get January jobs. It's going to be fascinating, fascinating times, because this market today, if markets are going to react to this kind of news like they did today, it could be a very, very, very interesting week. Also good for all of us, good for the economy to see employers still hiring, wage hikes slowing down a little bit, but the jobs are still there. 9 million job openings. Today, BlackRock comes out, upgrading U.S. stocks, moving to overweight on the U.S. stock market from neutral. Now, BlackRock, this is not dumb money, guys. This is top-of-the-line stuff, top-of-the-line analysis. They said the U.S. stock market looks like it's a full sale, go for it this year. So that's good news for stock market investors. I think election years are typically good. I told you guys yesterday the indicator, if stocks are up in January of an election year, it's a never miss, has never missed. Stocks are going to have an up year this year, averaging 15% in election years with a positive January. Walmart today announcing a 3-for-1 stock split. I remember back in the day, Walmart used to split like crazy. It's how all those Walmart shareholders got so frickin' rich. Well, now this is the first time they're splitting the stock since 1999. So the first stock split in almost 25 years. 3-for-1 for Walmart. I love stock splits. Have you heard this new thing? Okay, so we all been reading and knowing about this mammoth raise in shoplifting. Everybody kind of wanted to blame it on lax politicians, lax enforcement of the laws, changing of the laws to make shoplifting and petty theft, not such a big deal. Obviously, they kind of went a little bit overboard there. They want to blame the politicians because that's how they want us fighting with each other. The truth of the matter is it's the people that are the problem, not the politicians. This self-checkout stuff leading to just tons of theft, guys. Now they have this new phenomenon. Actually busted a cop doing this. They call it skip scanning. Have you heard this phrase? Skip scanning? So the guys are they beep, scanning their groceries to put them in, and here comes the package of steaks. Let's just put that one right in the bag. We don't need to scan that one. Well, here's the loaf of bread. Beep. Oh, wait a minute. Here's a pork roast. Whoop, right in the bag. So they're skipping, checking, and ringing up the expensive stuff and walking out the door with it for free. These friggin' retailers thought they were going to save so much money firing their cashiers and letting people have the privilege of checking their own bags. Wouldn't give you a discount, wouldn't even give you a coupon for doing labor for them, but okay, fair enough. Well, $112 billion in theft in 2022. That's way up from 2021. And I'm telling you right now, when the numbers come out for 2023, they're going to be way, way, way higher than $112 billion they got in there in 2022. Good. All I can say is good. These greedy ass corporations, they'll always find another angle to make another nickel, even at the expense of customer service, which we know is in the crapper. Obviously, they don't give a shit about their clients, having you check your own bags, check your own groceries out. Well, now it's coming back to bite them to the tune of $112 billion in 2022. And last but not least, little giggle about my boy Elon. You know I'm not a big fan of my friend. Judge shoots down Elon's big pay package. You know, Tesla proposed paying this guy $56 billion for a year's work. $56 billion, really? A shareholder suit saying that's an outrage. The judge siding with the shareholders shoots down Elon's $56 billion payday. I guess he's having a conniption about it, and I would too. That's a lot of money. So we'll see where that plays out. We'll report on that down the road as more news comes. Anyway, that's it for the day, guys. An interesting day. We'll be back here tomorrow. We'll have jobless claims and other big data coming. Tomorrow and Friday are both big data days. We'll be here to bring you guys the news you need. If you could, guys, please hit the like button. It changes the algorithms around, gets our video out in front of a few more people, gets us a few extra views. We'll be back tomorrow to bring you the news you need. Until then, guys, take care. Thanks.